Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the President of Mastercard Europe, Mark Barnett. Great to have you with us, Mark.
Thanks, Elliot. Well, it's great to be here. We've got a long association with the Paris Fintech Forum. We're very proud of that association to be key sponsors going back, I think, to 2017. So lovely to be here. Look forward to talking to you.
Likewise. Well, thank you for taking the time. So, look, before we get cracking, we're going to learn a little bit more about Mastercard. So I would imagine there isn't a single person watching, one would hope, that doesn't know Mastercard, and almost everyone will have at least one card with the iconic orange and red circled logo. But how would you describe Mastercard today?
I think in a sort of pithy sentence, we think of ourselves as a technology company in the payment space. But I think there's four legs to the stool of Mastercard. The first is obviously a technology network that can authorize a transaction, blink of an eye, anywhere in the world. The second is our brand, which is one of the most recognized brands in the world. And with that comes a promise, and the promise is that the merchant will always get paid, provided they have an authorization that consumers will be looked after if something goes wrong. And that's really the third leg of the stool, the franchise. And finally, there's the acceptance footprint, which is 90+ million merchants globally. That's doubled in the last 5 years or so. So those are the four legs to the stool, but a payments company in the technology space, I think, is the easiest way to think of us.
Okay, and of course, markets have been in turmoil this year. Interest rates are still rising, and there are fears of impending recession, if not actual recession in certain countries already, such as the UK. And yet Mastercard and Visa are still flying high. Is Mastercard recession-proof?
I don't think anybody's recession-proof, but look, you saw in our third quarter earnings that there's great momentum in the business for sure, and the consumer remains resilient. So look, like anybody else, we look at some of the leading indicators. One of those is the employment market. We see the labour market still quite tight, so people aren't too worried about losing their jobs, which means they keep spending, and we are seeing that resilience. So the picture, there's also, from the pandemic, high levels of savings or personal balance sheets, which those are the two mitigating factors against, the inflation and potentially higher interest rates. So we'll have to wait and see, and we keep an eye on it just like anybody else.
And of course, we've seen fintech valuations plunging. They're now a shadow of what they were almost across the board. That must perhaps mean that Mastercard is on the hunt for bargains. Is that a fair assumption?
Not really. When we think of M&A, we really look about it through four lenses. The first is it strategic? Because we're not value investors. We're not financial investors. We're an investor if we can see revenue synergies. Is it strategic? Do we have a right to play? Can we scale it? And is the price right? And obviously the prices are a lot better than they were, but it's got to meet the other three criteria as well. And honestly, if we can't scale it, our network's all about scale. If we can't scale it, if we don't have the right to play, if it's not strategic, then we're not going to be interested. But certainly, we're always on the lookout, that's for sure.
Okay, and I think recently you were Mastercard's point man for a recent European Commission roundtable on discussing support for Ukraine. How is Mastercard helping that country?
In a number of ways. I think the first and foremost is just keeping the lights on of the payments infrastructure, which honestly, it didn't miss a beat during the initial invasion. Continues to operate extremely strongly. But there's a number of things we're doing. We have a Start Path program. Start Path is our fintech accelerator. We'll probably talk about that a bit later. But we started a special one for Ukrainian entrepreneurs. Actually, it's gender focused. Or gender mindful in any case, because there's a lot of displaced female entrepreneurs in Ukraine that we're trying to help. We set up a support fund, and our Centre for Inclusive Growth donated some money to various NGOs on the ground, again with a lens to helping small businesses, and also we've donated to the normal medical and relief type NGOs as well. So I think there's lots we can do. I'm looking forward to the day when we can go back into spend more time in Ukraine helping rebuild after the war. And that's an optimistic phrase, isn't it? After the war, let's hope that's not too far away.
Right, okay. So look, we've heard about Mastercard. Let's now get to know Mark a little bit better. So Mark, if I'm correct, you spent most of your career at Mastercard, and I think before that KPMG. Assuming that wasn't always the plan, what did the young Mark Barnett want to be when he was younger?
Um, apart from playing rugby for England, I didn't really have a career plan. I never achieved that, by the way. I was very lucky. I went to a boarding school called Rugby School, where the game was invented. When it was invented, it was a brawl of 100 versus 100. It only got codified into the game we know when people went off to university and wanted to play each other from their various universities. But I'm really excited about the fact that we're sponsoring the Rugby World Cup, and it's going to be in France next year. In fact, France are looking probably like the favourite team at the moment. So that's very exciting for me. But I never set out to be in payments, that's for sure. But I'm extremely glad this is where I ended up. Payments used to be boring, but for the last 15, 20 years, they've become extremely exciting and at the very leading edge of what's happening in commerce.
And of course, exciting, I guess, can mean, very, very good days and also very, very challenging days. What have been, let's say, the best and worst days of your career to date?
Oh, look, I mean, I'm all about the deal. I love doing deals. So I've won some big deals recently that have moved the needle on share in Europe, which has been fantastic. Fortunately, I haven't lost too many deals. So on the downside, I think probably the downside. I used to be a consultant, as you say, at KPMG. When you didn't do your best, when a project wasn't as good as it could have been, you usually managed to turn it round. But I remember those feelings of feeling personally very deeply invested in getting things right, and they don't always go right, and that's something that you have to live with and learn to overcome in a career, I think.
I should say, Mark, I'm always fascinated in these conversations when asking questions that aren't necessarily finance or fintech related, and sometimes entrepreneurs, executives have secret lives that we're not always aware of. I understand you're a winemaker. How did you get into that? What is your wine? Where can we get some?
So look. Me being a winemaker might be stretching it a little bit. My oldest buddy from university, a chap called Simon, he is in the wine business. He built a very successful wine merchant business in the UK and Ireland. But then he sold that, did a degree in oenology at Southampton University and went to the south of France. Southern Rhone was where he always specialised, and started making some wines. And one of those projects was with me. It's called Atelier des Sauces. And we started in 2012. In 2022, we made our first profit, and it was only a small profit. So you see, this is a labour of love as opposed to a great commercial venture. But we do enjoy it, and most of the wine is distributed wholesale in France. So you'd have to go to a French restaurant. I could take you to a couple if you're around for the Rugby World Cup. I'll take you out and we can drink some of that.
Okay, well we'll see. I'm sure I can use Mastercard to buy some there. So look, Mark, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Mastercard Europe President Mark Barnett. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Mark, let's talk about the future of finance. So Mark, we discussed a little bit earlier about how the plunge in fintech valuations must be a great opportunity for a deep-pocketed company like Mastercard. I appreciate it's more than just price that you're looking for. But as we saw with, I think, Visa's attempt to buy Plaid, for example, it's not always as simple as fulfilling all of your criteria because, antitrust or competition authorities might kibosh any acquisitions that you want to carry out. How do you see the M&A environment right now in the world of fintech, and what kind of deals that might once have been okay might now, face scrutiny or even be blocked?
I don't think the recent fall in valuation has changed the way regulators look at the market. Excuse me. And so, the way we look at it is, I mentioned the four lenses we look at our M&A through. We recently acquired a company in the Nordics called, it was Nets Corporate Services, which is effectively an account-to-account infrastructure and bill pay company, detailing service in Denmark, for example, which went through the normal regulatory process and came through with an approval. And likewise, we acquired a company called Aya, also in Denmark, which is an open banking company. Open banking is in the very, very early phases, and Aya is a small company, but it gives us a great deal of knowledge and competence in how that market might develop in the future. So we're thrilled to have acquired those two things. And with bill pay, we announced a partnership with Poste Italiane recently. They're one of the biggest bill payers in Italy. But you walk into a post office and make your payment. So they're connected to one side of the ecosystem, which is the billers. On the other side of the ecosystem is rather manual, and if we can help digitize that with our partner PostePay, then that could be very exciting. So we're looking at opportunities with, and obviously open banking is we'll go market by market and have a look at what make sure we have good connectivity, and then the use cases tend to come on top of that.
Okay, and I mean, there was a recent editorial in the Financial Times I was reading about how and why Mastercard and Visa have yet to face their Kodak moment, when they get disrupted to the point of oblivion. The conclusion was that this still might happen. What do you think? I mean, is there just no chance, like it's just too much part of the fabric of our lives that there's no chance of anyone really taking a big bite out of your cake?
Look, I read that article too, and every year there's something new comes along that's going to disintermediate Mastercard, and we get asked. I've just been on a roadshow with our CFO with investors, and our investors obviously ask us that question all the time. And I think the reality is, if you look at some people talk about buy now, pay later. Well, I think buy now, pay later has a future, and we've put something on our network which can bring scale to buy now, pay later, called Mastercard Installments. But that's a market that we said a couple of years ago it's going to be regulated. It's a long, slow process for those who don't partner with us, and now we've got buy now, pay later fintechs actually partnering with us, because to build scale on the merchant side is a really tough thing to do if you're going merchant by merchant. So there's account-to-account payments people ask us about, not just in Europe, in Brazil and India and other places. But I think the reality is, when you've got an ecosystem, you curate an ecosystem which has about 3 billion consumers on one side, 90 million merchants on the other, and about 20,000 financial institutions, whether it be traditional banks or fintechs, that sit in the middle. That's a pretty compelling network, and most fintechs are understand that they're going to be successful by partnering with us, by becoming part of that network, rather than trying to completely disrupt it, which would be a fairly tough and a very long road to walk. So no, I mean, obviously we don't want to be complacent, but I don't see a Kodak moment around the corner for us just now.
Right, but as you say, I mean, there's always threats, and I'm sure you're asked about these all the time. I mean, some people talking about it, including himself, Elon Musk, talking about growing Twitter into some kind of everything app, a bit like WeChat, which will incorporate payments. And there's also, we've seen the likes of Apple moving ever more deeply, I suppose, into payments. When you're talking about the threats, no matter whether they're small threats or existential threats, would those be kind of among your kind of top 5 threats, a kind of everything app and a big tech company kind of getting into this space?
Well, as with everything, a threat has the other side of it being an opportunity. It was Apple and Apple Pay that used our originally tokenization capability to bring Apple Pay to market. When they launched their own financial services product, it was a Mastercard product issued by Goldman. So, obviously we keep a watching brief on Elon Musk and Twitter because, he was one of the founders of PayPal after all. He knows the space, but right now we see opportunities to partner with these big players as much as we do see them as a threat.
And Mark, I think a couple of years ago, Mastercard said that it was going to start supporting cryptocurrencies. What's the current situation, and what impact would the recent debacle we saw from FTX and the bloodbath we've seen on crypto markets, what impact would they have on any support that Mastercard has given or was planning to give to cryptocurrencies and digital assets?
So look, let me distinguish between cryptocurrencies, free floating crypto, and things like private stablecoin or CBDC, central bank digital currencies. On the first one, we've always been happy to be an on and off ramp for cryptocurrencies into the fiat world. I have to say we had a fairly cautious approach to this. A few years ago, we decided we didn't want to rush into crypto because we didn't know quite how the market was going to pan out. And as you say, there's been some recent events which haven't been so pretty. If people want to invest in those assets, that's their choice, and we can provide the on and off ramp into the KYC AML world of fiat currency. That's what we do. On private stablecoin, well, we've seen that some of those one lost its peg a little while ago, and so we see. They might not be as stable as some people think, but central bank digital currencies and the digital euro, I think that's a very interesting space. And we strongly advocate for, and I think it's going to happen, it's a question of when, not if. But we do very strongly advocate for a two-tier system where the commercial banks are intermediated in the distribution of that money, because a direct relationship, a one-tier system, a direct relationship between the central bank and citizens, what happens when something goes wrong? I'm yet to come across a central bank with a call center, so it'd be interesting. But if it's a two-tier system, and in my account I've got some central bank money and some commercial bank money, does it make any difference to me? I'm not so sure it does. So we'll wait and see on that.
And in that vein, whether it's CBDCs or let's say other digital currencies or assets such as Bitcoin, we have been talking about the end of cash being imminent for some time. I must confess I only use it to pay babysitters or the cleaner. But if you're a betting man, when do you think we'll be saying ciao to cash? 5 years, 10 years, 50 years? Never?
Look, we've given some guidance, which is we see the long-term secular shift being to carded volume being 9 to 10% in the long term. So that's five years plus we're seeing that. Now that isn't just that's a combination of PCE growth and secular shift. But we get a slightly distorted picture in the UK. I'm based in Brussels, where the picture is a little bit different. There's quite a lot more cash around. Our biggest economy in Europe is Germany, where there's a lot of cash. The further south and east you go, the more you'll find cash. So to get at the first part of that cash equation has taken us 55 years. I still think there's quite a long way to go. Some markets, I was in Stockholm a couple of weeks ago. I've been going there regularly for 7 or 8 years. I've never seen a banknote. So it's happening at different paces around the world, but I think there's still a lot of headroom left in the secular shift from cash to card.
Okay, and just changing tack slightly, we talked earlier about how Mastercard was helping Ukraine. I suppose Mastercard, Visa, other payment companies have also been part of the process of turning the thumbscrews on Russia in terms of stopping payments from happening there. What role should payment companies have in dealing with regimes such as Russia? Does it just depend on what the sanctions regime is going, and then you'll just kind of follow that? Do payment companies have a role to play in trying to perhaps have some kind of impact on situations like this?
Yeah, look, I think with Russia, it was a fairly specific case, and yes, and to start with, we were complying with sanctions as they were rolled out, but then we decided it was the appropriate thing to do to suspend. So it's a sort of over compliance, if you like, for which the US and the EU governments have expressed some gratitude. But it was the right thing to do. It was the right thing to do, so we did it. But it's not really our place to be making moral judgments about things. Usually, we'll allow the law to be, what you can use your Mastercard to spend on is really will be guided by the law of the local land, not start making moral judgments about that ourselves. Because if we do, I think it's the thin end of a wedge towards, being subject to pressure from all kinds of directions, which may not be appropriate.
Okay. All right. So look, it's time now for our round of rapid fire questions. Mark, are you ready?
I am.
Good. So we've got 90 seconds. I've got 90 seconds on my stopwatch here, on my timer. We'll get through as many as we can. One-word answers is what I'm looking for, and I'm going to start the clock now. What fintech segment besides yours has the biggest potential over the next 5 years?
Well, paytech in general.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
I don't have one.
Are we at the beginning, middle, or end of the fintech wave?
Middle.
Do you, as in Mastercard, have a metaverse strategy?
Yes.
Have EU and US regulations kept pace with all the new possibilities and behaviours we're seeing in the financial industry?
Broadly, yes.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, part of the future that we don't want to miss out on?
Somewhere between A and B.
Have you personally ever invested in crypto?
Yeah.
Are physical points of sales a part of the future of finance?
In the long run, probably not. I think it'll turn to software.
On a scale of 1 to 10, 10 being the highest, 1 the lowest, how probable is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
10.
That CBDCs become a mainstream reality in the US or EU?
6 or 7.
That you'll be able to open a crypto account at a top-tier bank?
9.
That SWIFT will still be the main tool used for transferring money around the world?
5.
Okay, we've run out, which is a shame. I'm going to ask you the final question, because the next one was that a new card or non-card-based rival will emerge to challenge Visa or Mastercard.
Yeah, look, we're about offering choice, so we offer payments that are non-carded anyway.
Out of 10, Mark.
Oh,
out of 10. What's the probability?
Out of 10, 2.
Okay. A nice one to end on, because I'm afraid we're out of time for the rapid fire round and also for our conversation. So I really just want to thank you, Mastercard President for Europe, Mark Barnett, for joining me today. Thank you.
Thanks a lot, Elliott. Very nice to be with you.
And for everyone watching, we'll be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.